In this video, we're going to be discussing Warren Buffett's recent investment of $10 billion into Occidental Petroleum Preferred Stock, which is being used to fund the acquisition of Anadarko Petroleum. Before we begin, I invite you to subscribe to this channel and like this video, which will help more people discover Sure Dividend's investor education efforts. With that out of the way, let's talk about Warren Buffett's investment into Occidental Petroleum. Berkshire Hathaway's growing cash pile is a common topic of conversation among self-directed investors. The company's cash and short-term investments account grew from $47.9 billion to $111.9 billion over the last decade. You can see this trend in the following image. Fortunately for Berkshire's investors, yesterday it was announced that Buffett made a $10 billion dent in this cash pile through an investment in the preferred stock of Occidental Petroleum Corporation, ticker OXY. Here are the details of the security issuance from the press release. Berkshire Hathaway will receive 100,000 shares of Cumulative Perpetual Preferred Stock with a liquidation value of $100,000 per share, together with a warrant to purchase up to 80 million shares of Occidental common stock at an exercise price of $62.50 per share. The preferred stock will accrue dividends at 8% per annum, or, with respect to dividends that are accrued and unpaid, 9%. The preferred stock to be issued to Berkshire Hathaway will be redeemable for cash, in whole or in part, at the option of Occidental commencing on the 10th anniversary of issuance at a redemption price equal to 105% of the liquidation preference, plus accumulated and unpaid dividends, if any. The preferred stock will also be mandatorily redeemable for cash, in whole or in part, upon certain specified capital return events. Dividends will be paid in cash or, at Occidental's option, in shares of Occidental common stock. The warrant to be issued with the preferred stock may be exercised in whole or in part and, from time to time, until 1 year after the redemption of the preferred stock. We believe that this deal is an excellent investment for Buffett and a very poor choice for Occidental Petroleum. We discuss both perspectives in this video. For Buffett, this deal resembles a similar deal struck with Bank of America back in 2011, when the financial institution was struggling with litigation related to the subprime mortgage crisis. At that time, Berkshire Hathaway invested in a $5 billion offering of 6% preferred stock that came with warrants allowing for the purchase of 700 million common shares at $7.14 per share, anytime before September 2, 2021. Years later, in the 2016 Berkshire Hathaway annual report, Buffett explained the rationale for the eventual exercise of these Bank of America warrants. Excluded from the table, but important, is our ownership of $5 billion of preferred stock issued by Bank of America. This stock, which pays us $300 million per year, also carries with it a valuable warrant allowing Berkshire to purchase $700 million of common shares of Bank of America for $5 billion at any time before September 2, 2021. At year-end, that privilege would have delivered us a profit of $10.5 billion. If it wishes, Berkshire can use its preferred shares to satisfy the $5 billion cost of exercising the warrant. If the dividend rate on Bank of America common stock, now 30 cents annually, should rise above 44 cents before 2021, we would anticipate making a cashless exchange of our preferred into common. If the common dividend remains below 44 cents, it is highly probable that we will exercise the warrant immediately before it expires. We believe that Buffett's plan is to hold the Occidental Petroleum preferred stock indefinitely. Occidental Petroleum can buy back their preferred shares in 10 years, until the corresponding dividend income that would be achieved through a cashless conversion into common stock generates incrementally more dividend income. Note that if this were to occur, then Buffett would still own half of the preferred stock because the warrants owned by Berkshire imply only a $5 billion total purchase price. So what level of dividend income would justify a conversion into Occidental Petroleum common stock? The math is shown here. Occidental Petroleum's quarterly dividend would need to rise to $1.25 for the conversion to be justified. This is certainly within the realm of possibility. The preferred stock is not redeemable for at least 10 years, and this implies a 10-year dividend growth rate of just 4.8%. For context, Occidental Petroleum has increased its dividend at 9.3% per year over the last decade, and this includes both the Great Recession and one of the worst oil price collapses in recent history. Overall, Buffett will be able to collect a delightful 8% preferred stock dividend yield while waiting patiently for the eventual conversion of his warrants. Moreover, at the time when it makes sense to exercise his warrants, it is highly likely that Occidental Petroleum's common stock will be significantly higher than the $62.50 purchase price. Occidental Petroleum's perspective is not nearly as positive. To be blunt, we believe the corporation has destroyed a great deal of shareholder value with this financing arrangement, Paying such a high cost of capital to Berkshire Hathaway implies one of two things. 1. The company was unable to secure the necessary debt financing through traditional mediums. Or 2. It values Buffett's involvement so much, too much, that it is willing to pay a much higher cost of capital. While the Anadarko acquisition is promising, an 8% hurdle rate, which will actually prove to be much higher should the warrants ever be exercised, is an extremely high bogey. We believe the company would have been much better off tapping the traditional debt markets to fund this acquisition. Investors in either Occidental Petroleum or Berkshire Hathaway should monitor this situation closely. We note that if Occidental's bid for Anadarko is not accepted, it is likely that Chevron submits a counteroffer, then Berkshire's proposed investment will be nullified. Thank you for watching this video, which explored Warren Buffett's recent investment in $10 billion of Occidental Petroleum Preferred Stock. We invite you to subscribe to this channel and like this video, which will help more people discover Sure Dividend's investor education efforts. If you're interested in learning more about our systematic approach to dividend growth investing, visit our website at www.suredividend.com.